G'day there. Welcome to the Closing Bell on the 24th of September. Now, I'm actually recording this on the 21st, so I have zero clue what the markets have done over the last few days. Look, we had the Fed come out on Wednesday night with their interest rate increase. I've been talking about the setup in markets recently, so hopefully you've felt prepared for whatever has actually happened. We're at a point really where the market could be a hell of a lot higher or a lot lower than where they are on Wednesday. So I'm not going to go into too much detail about the general markets today because I haven't seen what the Fed did. If they came out with a 1% increase and they were hawkish, quite literally markets could be 5% or more lower by the time you're watching this on the Saturday. But if they came out with a 75 basis point rate rise, they were a little bit dovish in the meeting, that's going to ignite a big short squeeze. But still, I'm long-term bearish. But who knows what they came out and said on Wednesday night. My gut feel is that they want to keep it a bit hawkish, and the charts are so bearish at the moment across the bonds, across gold, across equities, that if they did spark a sell-off, it could be quite a scary move. But you will know more than me. So today I thought I'd just look at a little company where there's been an interesting deal during the week where Origin has offloaded their Beetaloo Basin assets to a little group called Tamboran Resources. I think it's a really interesting situation. If you do believe in gas, the need for gas in the short to medium term as a necessary evil, I guess, to help the transition to a greener future. And the world really obviously showing they need gas with prices spiking, especially post the invasion of Ukraine. The Beetaloo Basin is one of the world's, biggest remaining shale, assets that, people know there's a hell of a lot of gas there. And if Origin has decided to offload their permits, you can imagine that they had some pretty good acreage. Now, they've offloaded that to a small company. They've taken a big write-down, which means they've really sold those assets on the cheap because they just wanted to get out of them. So that value destruction for Origin, where they've written it down, I don't know, a few $100 million or whatever it was, and sold it off at $60 million bucks, that value really has been passed on to this group. Now, they've done a deal with this Brian Sheffield, I believe a billionaire. They're also Falcon Resources, a US group. They're quite active in the Beetaloo as well. So they've ended up splitting up a share in these Origin assets. This little group, Tamboran Resources, has done quite a big raising at 21 cents, nearly $140 million. So they're cashed up with working capital, money for drilling. They've, really got a big acreage position there now. It's a story not for tomorrow, but it is a story if you believe in gas in the longer term, if you believe in this Beetaloo Basin story, that it could be a huge resource. This is something that you could put in your bottom drawer for the next few years to see how things play out. And it's quite a nice setup, being that this huge group, Origin, is trying to get out of looking like an oil and gas group and trying to make themselves look nice and green, even though they're going to take a 5.5% royalty and they're going to take the gas. If they do strike it and end up creating a lot of gas in production, they've got a deal set up there with Origin to get that gas because, Origin wants it. So let's have a look at the chart for this little company and why I think technically it's also an interesting thing to look at. So here we have just a daily chart. I just want to show you the setup in this group. A lot of these oil and gas plays are having a bit of a struggle. And the first thing I want you to note is after this news, we had the sell-off. I want you to note that the capital raising, a huge capital raising, which really is transformation of the company was at 21 cents. So we did have a sharp sell-off towards that level yesterday, and it's turning and rallying today up at 24.5 cents. Now, there's going to be even 25 cents trading there now. So there is a bit of buying coming into the stock. And what I want you to note is this range. Again, I'm always looking at where is the range, where is the point of control, where is the false breaks occurring in the range. So we've got that initial range from years ago, and you can see it's been a pretty clear situation of these false breaks of the higher the range, prices going back to the point of control. We had a false break of the lower the range. Where did price go back to? The point of control there, which was resistance. And it's been a bit of a tough old time, but still there's been accumulation going on, even though it hasn't really been going anywhere for the last year. It's still holding in there, isn't it, down the bottom of the range. So there's been a bit of a clear out of positions, but it isn't a disaster the way it's been moving at all. And this deal, I think, is, very interesting. So what I'm looking at really is that this is shaping up as a bit of a false break of the low of that major range. And we should really see a move back to the point of control. That's how I'd want to set this position up for the long term. And, the way I'd be looking at it is I'd be thinking about, okay, what's the risk I can take on with this trade? Where's the target? Once it gets back to that point of control, that's the spot where there could be a lot of resistance. And so that's really where you want to de-risk your position, because once it gets back to that mean, the middle of the whole range, which could be resistance, really your odds there drop to 50-50, don't they? So when odds drop back to 50-50, that's when you want to be selling what I do, sell a third of the position, and then I adjust the stop loss to a point where I'll break even on the whole position. So an example here. So if you were to buy at 25 cents, I'd have a stoppie around 18 cents, which is 7 cents. My initial target would be to that midpoint there, which is 32 cents. So again, that's equivalent, isn't it? 7 cents. That's the target I'm aiming for. So that would be the initial trade, would be stopping out if it couldn't carry on, fell back below the all-time low. I'm risking 7 cents on the trade. My target is to 32 cents. So that's the target is 7 cents, equivalent to what you're risking. But that's not the risk reward. It's not a one-to-one, because I'm only selling a third of the position at that point. Now, if I was to sell a third of the position, that means I've made 7 cents on a third of the position. So to break even on the trade, basically the price would have to fall 3.5 cents, right, below your initial entry price. So if it was to fall 3.5 cents below there, that would be 21.5 cents. So after I've taken part profit at 32 cents and sold a third of the position, my break-even price would drop to 21.5 cents. So from that point on, I'd sell a third of that midpoint. I'd adjust my stop loss to 21.5 cents, which still gives the stock plenty of room to move. And then I would stop out at 21.5 cents if it fell to that level. And then you walk away with the capital you started with. So that would be a setup for a trade on a short-term basis, short, medium term. But if you're looking at this stock as a potential real long-term position where if they can get this going, get the Beetaloo up and running and They've just bought some great acreage off Origin at a cheap price. So they're getting that value uplift. They've just had a big capital raising. It'll take some time to digest. But if you've got the vision of a 3 to 5 year view, this is the play that could be quite interesting. So potentially you're just buying some stock and putting it in the bottom drawer and forgetting about it. So you're not buying a huge position because you've got no stop loss on the thing. And you're just saying, I think this company could get things going from here. And then you just, buy a few grand worth, whatever it is, and chuck them in the bottom drawer and hope for the best. Because if things do go well, it could be many multiples in future, that's for sure. So that's just a few ideas for you for how you could approach these things, depending on whether you're a short-term trader or long-term investor. And it's an interesting little play, I think, when you've got a huge company offloading what were really good assets at a cheap price to a company. There could be plenty of upside for them. All right, well, that's enough. I shall come back with more next week. Cheers.